In this video, I'm gonna share with you 7 essential money moves you should make right now. Everyone is talking about freedom and money. Everyone wants to have money. That's what we're doing every single day. We're all waking up in the morning, and instead of spending time with our loved ones, instead of taking care of ourselves, what we're doing is we're getting up and then we're going to work. So in all the reality, even though probably you saying to yourself, no, I don't want money, I don't need money. Yes, you do. Everyone needs money. And here's another thing is if you Google today, the most searchable word is money, how to make money. So we all want money. We all want to have this beautiful dream life. But what do we actually do about learning everything about money? So in this video, I'm going to share with you the 7 essential tips that you should make right away, right now. Well, the first one is to know what exactly do you want. So it's kind of the same thing. Like if you wanna go somewhere, you gotta know where you're going. So let's say if you live in New York and you wanna drive to Miami, so then go to the car, you're gonna sit down, and today it's very easy. You put in the navigation, you put the address, so where do you wanna drive? This is what I discovered working with these business owners, with individuals, that majority of them don't even know what do they want. I'll tell you a story from my own experience. I remember when my daughter was about to graduate from high school. So I remember when we were having that conversation, what career she should pick and what college she's going to choose. What I did is that we sat down and I asked her, what do you want your life to look like? What do you want to happen in your life? Where would you like to live? What would you like to do on day-to-day basis? Then the next thing is, once she told me, okay, she said that I want to live in New York City, in Manhattan, I want to have this beautiful apartment, go out, have all these friends, buy myself all these beautiful clothes. I said, beautiful, this is all great. All right, so now let's calculate how much all of this is gonna cost you. We identified, okay, it's gonna cost you like about $90,000 to $100,000 to have that beautiful life in New York City. It's very expensive. So the next thing I asked her, okay, now that you know how much you need to be making, now let's reverse engineer this, and now let's think about what kind of career do you need to have, so that career will pay you that much money to create this beautiful lifestyle. So you see, it's very important to know what is this that you want. So that's the first thing that you start with. The second one is have an emergency fund. It's whether you have your own business or you don't have a business or you just working for someone else, you still want to make sure that you have an emergency fund. Why is this important? Well, it's important because you never know the unpredictable, what might happen. So today you have the job, even though you're thinking, I have this secure job, but I hate to break it to you, there is nothing secure in this life. Then what happens is that you lose the job, and then you might get some severance pay or unemployment, but then if you're not going to find a job, then what happens if you don't have that emergency fund? Then this is where you start having this financial restraints. And the same thing applies if you have the business. For the business, it's very essential. This is even most important, because if you don't have enough cash on the bank account, then you're not going to be able to continue the business. And typically working with the business owners, this is the first thing that I see that happens. One of the clients that came to us, so he had this beautiful idea, amazing idea. He was so passionate about food, and he came up with this beautiful concept where he opened up a restaurant in Manhattan, in the city. What happened is that he didn't calculate it, all this cost, how much it's going to involve into putting into this whole project, into this business. What happened is that it took a little bit longer than he expected for the business to start earning the money and bringing this cash flow into the business, but he still needed to pay to all the employees, to the cooks, to the waiters, for the rent, for the insurance, like all of the expenses. The most important is the marketing, because if you're opening a new business, if you're not marketing, then no one knows about you. So surely what happened, the first thing is that he ran out of the money he couldn't afford to pay for the marketing. The next thing happened is that he couldn't afford to pay for the rent. And then it's just, started to pile up. And shortly what happened is this beautiful vision, this successful idea had to die because he ran out of the money. He was just open for 6 months, and all the money that he invested, all the time and all the energy, because he didn't have enough money in the emergency fund, he had to close the business. So the last thing that you want to do is, if you're opening a business, is to run out of the money and just give up on your dream and ideas. And the same thing happens in your personal accounts. So therefore, having an emergency fund, it's very essential, ideally to have for at least for like 3 to 6 months, meaning that if you don't have money coming into the bank account from the salary or from the business, you can still run the business and pay for all the expenses for the next 3 to 6 months. The third one is know your net worth statement. Let's identify what is net worth statement. Net worth statement, it identifies what do you worth, what are you worth. If we're talking about you personally, so then everything that you personally own. If we're talking about business, then everything that business has. How do you identify this, and why is this important? Because it opens up this whole financial situation. It tells you how much money do you have. These are all your assets. How much money do you owe? And then if you take how much you have minus how much you owe, that shows you net worth. So a lot of the people, and honestly, I'm pretty sure right now, if you're watching this, do you even know? Ask yourself a question. Do you know what your net worth is? And this is very important to know, because if you don't know any of this, then how you're planning to invest your money somewhere, or how you're planning to be part of any opportunities. So therefore, you would like to know what your net worth is, like how much you have money, how much is available to invest. So it's pretty easy to calculate the net worth. And by the way, I just remember that I do have this whole net worth statement. And if you would like to take advantage and calculate it, it's very easy, just gonna tell you step by step and guide you. Then you can click the link and download the statements, and it will guide you step by step how to fill this up. So anyway, the way you do this is you identify all the assets that you have, like how much cash you have on your bank account, on your personal account, on your brokerage account, if you have pension accounts, if you have assets, like you have your primary house, secondary house, so if you have your investment properties, cars, valuables. So this, everything will go into the asset column. The next thing is that you identify what are your liabilities. So that's everything that you owe to someone else, like credit cards, the mortgage, if you have like a car loan, if you like student loans. By the way, this is the big one. I see like lots of my clients, they got out of the college like 20-30 years later, they still all have this student loan. So basically everything that you owe, then you list in the liability sections. So for instance, let's say we calculated like in the asset sections you have like $1 million, and then you take the liability section, then it turns out that you have like 900,000 on all these debts. So the next thing is you take this 1 million minus the 900,000 on all the debt section, and that gives you your net worth statement. In that case that I just showed, it comes out to 100,000. So now, what does this 100,000 mean? It means that if you sell all your assets, if you take all the cash, sell all the assets, like all these houses, cars, valuables you have, you pay all your debts, you're going to be left with 100,000. So the next thing is, why is this 100,000 important? Well, 100,000 important is, let's say if you want to invest somewhere, then you only have 100,000 to invest. Or on the other hand, here's another thing. The net worth determines how long you can live, what you're worth. So meaning, so let's say if your salary is 50,000 a year, and your net worth is 100,000, it means that for the next 2 years, assumingly if you don't work or don't do anything, you can live for the next 2 years without working. So as you see, wealth is not just measured in money, it's measured in time. So in that case, you only have 2 years to live on this 100,000. So saying that, you definitely want to make sure that you have a high net worth. The more cash available, the more net worth you have. That means that the longer you can live without working for it. So let's say in that case, if the net worth was 1 million, and you earning 50,000 a year, okay, so that means that you can live without working for 20 years. And that's how you create financial freedom for yourself. The fourth one is money makes money. So that's why it's important to have that net worth statement to identify how much cash you have. I'll share with you one of the examples with one of my clients. When we had the strategy session and we did this net worth statement, what we discovered is that she was having the cash sitting in her bank account. It was just literally sitting on her checking account. So what it means, she had like over 200,000 on the checking account. And what it means is that the money, okay, this is great because she does have this emergency fund and that's why she was keeping all this money. But then on the other hand, they were just sitting there and not doing anything. So what she could have done differently, she could have, like today, let's say, put this in the money market account or in the CD account. What does that give you? Like today, the interest rates in the bank are very good. If you put your money in the money market account or CD, you can earn like 4 to 5% on that. So instead of just for the money sitting on the checking account, you can already start earning this money. So like in her case, let's say if she puts this 200,000, okay, with 5% that she would be getting from the bank, so this 200,000 will give her $10,000. $10,000 just like that without working or doing anything for it. So you see, and if she's not doing that, then you're just losing this money. So that's why it's very important to identify what you have and then how much you have. And then the next step is you just want to make sure that all the money that you have, that you're constantly making money on that. I just shared with you a simple example with money market or CD, but there's other ways that can be done so you can start earning more money. And if you would like to find more about that, then you can click the link and book the strategy session with me. Okay, the fifth move is taking advantage of all these retirement plans that the government is allowing you to take advantage of. And I absolutely love this one. I know I'm always talking about it. That's just because I love that, because the government gives you possibility to take advantage of all these plans. And why is this important? For the number of reasons. First, it allows you to save money, accumulate money towards your future, towards your retirement. And I hear this a lot when my clients say, oh, but I'm too young, this is so far away, I don't want to think about it. Yes, in a way you might be right. Okay, if you're like 30 years old, you have another 35 years to retire, like why would you want to think about that? But here's the thing. Don't think about, okay, if you don't want to think about like as a retirement, that's fine. But think of it as saving this money. Think about as accumulating and growing your investment and growing your wealth. The retirement, the government just uses this as a retirement so that to allow you to save this money toward your retirement. But in reality, by taking advantage of all these plans, what in reality you're doing, you're saving the money, you're accumulating your wealth, and you're using these funds to save money on taxes. And this is one of the fastest way to save money and to boost your cash flow if you own your businesses. So let me just give you an example. What do I mean by that? So it doesn't matter if you work for someone or if you own your own business. It works exactly the same way in terms of the savings, in terms of the deductions. It's just when you have your own business, then you have a possibility of putting more money into these plans. So let's say like you're in a 24% tax bracket. And then if you live in New York, then you also need to pay New York state taxes. You also need to pay New York City taxes. So let's just assume like this whole tax bracket is like 30%. Now, if you take $10,000 and you make a contribution towards this retirement plan, then you're saving right away 30%. That's $3,000 right there, instantly, without working on doing anything. And it's 30% return on your investment. So you just took this $10,000 and invested, and the government is giving you 30% as a return on your investment, just because you're taking advantage of these retirement plans. Here's another thing. Now, if you take this further, you took this 10,000, you put this in a retirement plan, and now this 10,000 are gonna, let's say, earn another 5,000. So the beautiful thing about that is now that this 5,000 in this retirement plan or that 10,000 in the retirement plan that earned this 5,000, you don't have to pay taxes on that again. So what it means is now you have 15,000 instead of giving portion of it to Uncle Sam. It's all there. This is your money, and now you can take this money and further reinvest. And this is how you accumulate your wealth much faster, and you accelerate your growth in your income. The sixth one would be is tax-free accounts. So there's many different tax-free accountants that government gives us advantage to use and take advantage of. There's a health spending account, there's child care credits. So if there's for those that are working and they don't have their businesses, those that have businesses, then they can take advantage of accountable plan. Or accountable plan means that they can start deducting whatever expenses that they have, business associated expenses for their employees and for them themselves, because they are the employees of the business. So they can take advantage and deduct them, meaning that it becomes tax deductible, and then they have more money in their pockets. And once you have more money, then you can start investing this money to generate more money. So let me just give you an example. So let's say if you don't have the business, you're just working for someone, then you're taking advantage of the health spending account. So health spending account, it allows you to put certain amount of money into this account that are tax free, then you don't need to pay taxes on that. For the 2024, it was $4,150. So now think of it this way. So let's say like you have a W-2 and you have your salary is 100,000. So now instead of paying tax on 100,000, you taking advantage and you deducting this $4,150 from this 100,000. So that means that you're paying taxes on lesser amount. So now let's say if it's a husband and wife, family of two, then you can double that. Then you can deduct $8,300. So now let's say it's a family of two and they have kids. So they can take advantage of the child credit. And for the child care credit expenses, let's say they have kids, they're paying a babysitter or sending the child to the daycare or to the summer camp, so they can deduct $5,000. So typically when you want to take advantage of the health spending or the child care, then you need to let your employer know there's certain forms that you need to fill up. Typically you fill them up before year end, and they just take this money out of the salary, but this is your money to use. No one is just taking them, they're not gone, they don't go anywhere. So that's why I strongly suggest for everyone to take advantage of this, because you're still using this money. You're still going to use money for the medical expenses, you're still going to use money to pay for the daycare, but that becomes pre-taxed and you're not paying any taxes. I remember when my husband used to work in the corporate world and we had small kids, that's exactly what I was doing. I was taking advantage of all the plans that are available. I was maxing out 401k. By the way, maxing out 401k, if you work for someone, then you can also take advantage of these match contributions that the employer gives you. So this is like free money. So in my husband's case, I think it was like $2,000 to $3,000 a year that the employer was matching. Why not? This is free money. I was taking advantage of the health spending accounts, of the child care. So if you add all of this up, and it significantly could boost your income. And definitely if you're not doing that, then make sure that you sign up. And for the business owners, take advantage of all these deductions that you can deduct through the businesses. And the last one is book a strategy session with your accountant. And if you don't have the accountant, you don't have the tax advisors, then you can book a strategy session with me. And I guarantee you that I will find you up to 100,000 hidden in the bank accounts that you didn't know about. Why is this important to book a strategy session with your accountants or with the professionals? Because there's a lot of the deductions, a lot of the credits that you can take advantage of. So if you're watching this video, I invite you to schedule the meetings, right? right now, right away, with your accountants, with your tax advisors, financial advisors, so you can take advantage of all these strategies, everything that I shared with you in this video. Here's the thing, there is no one size fits all. Whatever I shared with you, some of it might work in a great way, some of it you just need to readjust, and that's why it's very important to have these meetings, and have these meetings not just once a year when you're doing the tax return, but have these meetings quarterly, maybe even every month. And then this way, you're gonna get yourself much faster and closer to that financial freedom that you've been working so hard for. If you have any questions, please share them with me in the comments, and I would really love to know what are some of the things that you're curious to learn about, or some of the things that I can share with you in the next video. And if you found this video very valuable, then please like and subscribe this video so you can get more videos from me that will help you to get much closer to the financial freedom that you've been dreaming about for so long. And remember, it's all in your hands. Thank you for watching, and I'll see you in my next video.